Right now, it looks like investors are still in a little bit of a shock. Some very interesting numbers come out. $3.4 trillion are sitting in cash. There's an awful lot of people that have been sitting in cash for 2 years. So think about this, $3.4 trillion sitting on the sidelines because everybody has been nervous about the markets for the last year and a half, buying into the mainstream media, not looking at the numbers, not looking at the analytics, not looking at the data that has been coming in, giving us some indication of the underlying fundamentals. I would like to ask those same investors and traders that have been sitting on the sidelines for so long, nothing in the markets, everything's in money market account because they're saving their account from the downturn. And all they've done is prolonged their savings without any gains because when the downturn does come, they've already been in savings for a long time. So they missed out the 20 or 30% gains that they would have had. So now we get a downturn of 5, 10%, and they're still behind the 8 ball. I don't understand, but people need to wake up and understand that there are some economic data points out there that we can be looking at to try to take a good picture of this. And rather than to get sucked in to mainstream media and throw all your money in a money market account for 2 years, you need to think. Now, fortunately, we have been blessed that our partners haven't done that, because that is not the camp that we have been in here at Financial Issues. We've been in the camp of, yes, a little bit higher cash position than we would like to have, but we still have a great deal exposed to the markets, and there's been big payoffs for that. Stocks are rising, and now a report says that their nerves are calming. Their nerves are calming. Well, their nerves are probably a little annoyed right now because they've been out of the market for so long. But they're saying that that is going to lead to the view of huge cash. The notion is that this $3.4 trillion, it's an enormous amount of money, is going to start flowing out of these money market accounts and start heading into the market, and that's going to give us the next new highs. So let me get this straight. You've sat all your money in a money market account, waited for the markets to reach all-time highs, and now you think you ought to start getting in. Yeah, that's a good strategy. Look, folks, the only strategy that works, and the more people that understand this, the better off they're going to be, is the strategy of being a long-term investor and getting in for the long term. And long term does not mean 2 years, does not mean 2 months. It means 8 years, 10 years. And watch, just look at the statistical data at the probability of losses after 8 years. After 10 and a half years, it goes to 0. Get in and stay in, just have good, solid companies. You don't need to take a lot of risk to make money. Hey, I want to thank you for watching the clip. We sure do appreciate it. Would you go right now, click on that subscribe button if you haven't already. That helps us. We would appreciate it. Thanks again.